Good afternoon. As the Honourable Minister of Information has said, there was a briefing by the Fiscal Policy and Tax Reform Committee. Essentially, they've been working for roughly 90 days. They've been working very well and very effectively, such that they're in a position to have even impacted the economy by coming up with initial reforms, as well as signposting the way forward in terms of very important targets. So in a nutshell, the policy on VAT removal on diesel is from them. They are looking to help boost fiscal situation of the government by increasing revenue, particularly tax revenue, through digitalization, additional efficiency, and rationalization of the range of taxes that we have at the moment. They are looking to increase the ratio of tax revenue to GDP to 18%, which is the average for Africa. So many countries are above that level. It is actually about double where we are now, and within a matter of a few years, their target is to reach 18%. And there's an economic, other economic measures in the short term are being contemplated, and the report was well received by Mr. President and indeed the whole Federal Executive Council. Honourable Minister, at the same time, I would like to give a summary of the memos that I had approved at Council today. And of course, they were all to do with financing. First of all, there was an inherited financing, an inherited loan processing, which was to do with the a $100 million financing from African Development Bank and US dollars 15 million from the Canada African Development Bank Climate Fund. And it's all to finance Abia State. Essentially, it was approved, or it was processed before this administration came in, and so it has been inherited. Essentially, it is concessional borrowing, around 4.2% per annum by Abia State through the federal government. So the funds are to be on lent to Abia State, and then for waste management and rehabilitation of roads in Umahia and Aba in particular. That was approved. Secondly, there was financing of $1 billion, concessional financing, 25 years, 8 years moratorium at about the same 4.2% per annum, which was approved by the African Development Bank for this administration. And really, it was a recognition of the macroeconomic measures that have been taken, the swift movement towards macro stability, restoring revenue, improving the foreign exchange situation, and so forth, that have been taken by this government. The reward, as far as the African Development Bank, a concessional financing organization, was to provide 1 billion in general budget support. And finally, in order to keep working hard and maximizing the ability of the government to use the markets and to take advantage of different situations and improve situations, the Federal Executive Council approved a total limit of 2 trillion naira to be available for use by the by Ministry of Finance in order to go in and out the market and essentially to, where possible, bring down the rate of interest on the current outstanding. So essentially, it will be refinancing. And the view is that there will be an opportunity to save about 50 billion naira or more in debt servicing over time by giving back expensive debt and refinancing it with cheaper funding. Is the 1 billion for budget support the same as 1 billion for agric? The answer is no. As I said earlier, this is a concessional financing. It is difficult to get, and the budget support one in particular was really a reward and support for the ongoing macroeconomic reforms, which of course improve the viability and financial standing and capacity of the country. So the two are different. And then on the purpose of the $1 billion budget support, it is to support the government's program overall, but particularly in its regulatory framework for the power sector, strengthening social inclusion, all important domestic resource mobilization. You talked earlier about the tax committee and the fiscal policy reform efforts that are going on. So it's to support that and generally to strengthen accountability, transparency in government operations. So there's a whole set of specific programs and initiatives which the $1 billion is to support, but it's not a project-based funding. That's why we say it's budgetary support.